And all of us know that today the interest rates in the country are very high, and generally in our country, the lending to the industry is never less than 12-13%, and even today market it is about 15-16%. So all these long years, 10, 15, 20 years, whatever the SME entrepreneurs use the debt capital, they have to service the debt year after year. They have to pay the interest year after year to the banks. Generally ये बोला जाता है कि SMEs की मेहनत बैंक की कमाई. SME entrepreneurs work hard all the year, day and night to make money, and at the end of the year, substantial portion of the earning of the company they give it to the banks. So the SME entrepreneurs, they have to really sweat out to serve the debt all these long years, and after that they have to return the principal capital also to the banks and NBFCs which have been lending to them as a debt. And all of us know that sometimes even the promoter may be very efficient or very competitive person to run the industry, but all factors, risk factors, are not within your limits. There can be unnatural calamities, there can be various unforeseen circumstances that may crop up, because of which a SME could not perform or get into problems. And if the promoter is not able to pay the debt, his assets will be attached and the debt will be recovered. This is generally what we have seen about the debt in the markets. If you take equity capital, and also debt creates a lot of liability. And if you take the equity capital, let us say investor has invested a certain amount, and he is issuing additional shares to raise the equity in the capital markets and raising, let us say, money through SME exchange, BSE SME exchange. The investor in the equity with the SME, he is like a partner for the SME promoters. Let us say company has a net worth of 10 crores, it is coming to the markets to raise, let us say, another 10 crore or 15 crore or 20 crores. The equity capital that is coming, the shareholders are like partners to the promoters in the business. So every business partner is taking their own risk. So there is no liability on the promoters of the SMEs. So this is the biggest advantage in the equity capital for the promoters of the SMEs. Here there is no liability for them. Tomorrow company performs well, the shareholders will get good returns, and if the company for any reason is not able to perform that well, the shareholders also equally suffer. And generally, other very important difference is, unlike debt where you are servicing the debt year after year, in equity there is only one-time cost of raising the equity capital. Let us say you are coming to the SME exchange, bringing an IPO and listing your company. There is only one-time cost of bringing an IPO. Year after year servicing, those costs are not at all involved. And if you apportion the one-time cost that is there over a long period of 10, 15, 20 years, the cost of raising equity capital on the SME exchange is negligible compared to the debt capital. And other very important thing, all of us know that entrepreneurs run a lot of risk when they develop new products, new technologies, and they take a lot of risks and challenges and try to build up an enterprise. And it's very important that these risks is apportioned over a large section of the society, rather than they take the entire risk onto themselves. These risks sometimes can prove counterproductive also. So it is very important that the entrepreneurs only should take a risk to the extent desirable for them, to the extent they can really hold on it, they can really service that risk, and remaining portion, it is better for them to go for the equity capital and share the risk with the shareholders. And this is how the SME exchange and raising of the equity capital is going to promote a lot of entrepreneurship and a challenge to the entrepreneurs in developing new products, new technologies, and which can be tested in the market and can be made success. So new products, new technologies, and even greenfield projects, all these involve certain risks, and it is always advisable that the entrepreneurs rise as much as equity capital on par with the industry debt equity ratios.